Today's number is 80. It's been a while since we've seen this happen to one of our favorite asset classes. The RSI is in extreme air territory, but what tends to happen next when Wall Street's doing what it just did? They're wrapping gold and Bitcoin together. It's a classic Wall Street move, and it has many people starting to ask the question, to where will the top be? Well, in today's video, we'll take a look at the positive gamma moves, the options market, and why the flows of the next 48 hours could have dramatic implications over the next month. Also, Apple's new iPhone event. It was a buy the rumor, sell the fact, similar to most years. But is someone missing something really important? Stocks, commodities, and cryptos, guys, don't go anywhere. Let's cover it all right now together. Well, welcome back everybody to one of the largest daily shows on the planet. My name's Thomas Atkinson, and in today's video, we'll break down everything that you need to know right now about markets, from the latest macro to the big options flows. And boy, oh boy, have there been some key levels starting to appear ahead of the inflation figures. Now, we'll discuss why that second largest big number of the month has a big impact to what's going on. But let's start off with the headlines moving the markets right now. First up, Cantor Fitzgerald. Well, he's launched a new gold-backed Bitcoin fund. And this is such a classic Wall Street move. Take a protocol that potentially breaks the model, which is Bitcoin, wrap it up inside a new normal model, which is gold, and then sell it as a safety play. That sounds like a pretty much a green tick to me. And is this going to be marketable? I really think it is. And this also marks a potential point here, or an inflection point for markets, where we may start to see more gold exchange traded funds and more Bitcoin exchange traded funds and wrap products start to appear. Now, it does have me a bit concerned because this is also a stage of often late cycle movements. So we have to then argue the question of, is this the end for gold while everyone goes absolutely ballistic about it? Well, you guys know that 2.5 years ago, I went very bullish on gold, and so did some of you guys. But the big thing was that we basically believed that it looked incredible on both the macro side, the technical side, and of course the central bank side across the board. Central banks are purchasing it, and you'll see why that's such an important factor. And I think if we want to pump the brakes here, it's likely that gold is still going to be a pretty damn important asset class moving forward. But did we just move too quickly, too fast over the last 2 weeks? Well, maybe so. We have entered into rare territory. An RSI well over 80 for the first time in a while on the monthly. And it means that we kind of line up with similar points where we see either temporary peaks or the end of a run. Now, I don't think it's the end of the run. You guys already know that I'm actually looking at 4,000 plus for gold. But I do think that as we approach that 3,700 marker, you've got to be a little bit more careful. It could be a sign of, do you hold it? Maybe. Do you take some profit off the table? Well, that's up to you, and obviously make your own decisions. But certainly adding new positions here may not necessarily be the best move, considering everyone is talking about gold. And I mean everybody. Not only is it literally on Twitter or X, whatever we call it now, every single day trending, but I also notice it here on YouTube, and everyone is discussing it. So just remember, when everyone does something, you want to say, okay, ride the wave, but maybe not get involved on new positions. Amazing how fast things move too, by the way. Only a few weeks ago, we were very bullish on that breakout, and look where we are now. Let's have a look at foreign central banks. This is, of course, one of the best bull case scenarios for gold right now. And for the first time since the 1980s and kind of 70s, we've seen central banks holding more gold reserves than treasuries. And this is probably going to be a play to get rid of debts in the future. Now, we will talk about this in the future, but there are only really 3 ways that central banks can reduce or get rid of their debts. And I guess you'll know one of them straight away, which is just to renege on the debts. But there are actually 2 other ones that we'll discuss in an upcoming video. So make sure to subscribe for that, as this will be an important factor into the future. So where's gold going now? Well, as we've discussed, there are 2 real plays. One of them is to take a symmetrical triangle, breach it up, and you end up getting around 3,700 to 3,750. At the time of the recording, we're kind of getting close on those numbers. We hit about 3,650, and of course we hit 3,700 on some markets for gold. But ultimately, you have to kind of think this could be a pennant move. And there may be some violent action in between. That's perfectly normal and super on track for the way that something like gold, silver, or other metals and commodities actually trade. So for now, I guess the story is we've got new funds coming for gold. Everybody's loving it, but that usually means that there'll be a shakeout. Do you agree with that statement though? Let me know in the comments down below. I know it's only been 2 weeks since the break, but the thing was it's been pretty ferocious. So the trend's up for now. We'll be looking for signs of a potential pullback. And then, of course, I still think the dip buying will come in. Now, let's talk about the elephant in the room, the new iPhone. Some form of orange color and, of course, a whole bunch of other things. You know innovation's gone when the selling point of the iPhone Air is it's thinner and it has a brighter screen. That's pretty much what I'm thinking they're basically saying now. So another year, another non-foldable phone. But it wasn't really, I think, about the iPhone, although if I was to pick, I'd say the iPhone 17 is a pretty good upgrade. Pretty much the iPhone 16 Pro with a couple of other things and one less camera on it. Not bad at all. But really, it was probably more about the live translation feature on these AirPods. And I'm thinking if this actually works properly, maybe it's just going to be another thing for Apple to lock people into their ecosystem. Remember, Steve Jobs had the idea of the honey and the bees. And what he wanted everybody to do was basically be bees that were kind of developing or using the stuff that they've actually been producing. And then, of course, they would be the hive effectively. In this case, this could be a huge game changer if it works. And while I understand that some of you guys will say, Tom, this technology's already been around, the thing about Apple is they tend to only release it when it actually works. Some of the other ones don't work seamlessly enough. But imagine that you're on a trip somewhere in the world, you're sitting there, sometimes you're going into a bit of negotiation for some deals and they're trying to rip you off using a different language. Well, no more, guys. You get ripped off by Apple for $250, but maybe you get it back in being able to say, whoa, 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 whoa. I want a 20% discount. I heard what you were saying. I can imagine the new users of this technology. It's going to absolutely game change the way you do these things. But either way, pretty cool. I like the AirPods 3. A little bit of an extra as well on these. It turns out that the AirPods Pro 2 should also get this feature. But I think that's probably the game changer from this one, along with a heart rate sensor inside. Kind of makes you not really want the watch anymore either. So we'll see how that ends up happening to the stock. The key really here, of course, we are mostly not selling, of course, Apple products. Instead, we're talking about the stock. It was another one of those buy the rumor, sell the fact style events. And that's actually been the most statistical event that we've had over the last kind of 15 years plus since having iPhones. It's always been kind of hype into it, sell afterwards, find a base. We'll look at the chart later on, and then maybe we actually see a pickup. Speaking of the markets right now, a lot of people are saying this market's overpriced. Probably. This market's in a bubble. Yeah, probably again. And this market can't go up anymore. Well, yes and no. You'll see based on cycle analysis, it certainly can. And at the moment, you've got to remember the thing about the S&P this year is it's actually holding up to the model. So what that means is that earnings have met expectations. And according here to Goldman Sachs via Mike Zaccardi, we've basically got a market that is continuing to drive off effectively the Mag 7 and AI stocks making more money. Now, as long as that holds up and as long as these consensus estimate growths happen, Wall Street will keep buying. But just remember, the stock market and the economy are different. So what the actual economy is going to need is the Fed to do multiple cuts, which the market's already starting to price in, 2 this year, 4 next year is the expectation. And we're also going to need some form of QE liquidity. Now, will this eventually push the system into a collapse? Probably, but at the same time, it's kind of just barely holding on at this stage. And sometimes that's the way the market likes it. So Goldman Sachs and many others are upgrading their paths. They're actually going to 6,900 for the next 12 months. And many people are actually in the 7,000s. Now, I'll upgrade my opinions on the next 12 months sometime in October, September, October. I usually do it. Last year, I said around 6,850 by basically October of this year. And while I'm probably going to be off by a little bit thanks to the sell-off, because remember our two main things were one major sell-off that was going to be about 10, 15%, ended up being almost 20 or 21, I guess, if you look at it. And that was because of tariffs, and that the market would still recover based on just more tools being used. Tax cuts, stimulus, and of course, probably Fed cuts in the future. Now, another chart to watch and to really keep in mind when it comes to these markets is this one. the consumer discretionary versus staples chart. And this shows you 1/3 of the US economy. Now, we've already shown in previous videos how bad auto delinquencies are getting. Subprime auto delinquencies, highest ever. Again, the economy is looking shaky at these points, but the stock market doesn't care. And this is why sometimes the macro side doesn't marry the actual price action. Remember, do what they're doing, not what they're saying. And at this stage, the markets are still rallying. And what's been happening recently is it's been a bit of a rotation, but it hasn't been as strong a rotation as you would think. In fact, the advanced decline lines here from the Luthol group actually shows that on the mid caps and the small caps, it may still be kind of early days in terms of the recovery here in the broader market. Now, the companies that are kind of better inside of these small caps, they've been improving. We've already shown that. We've shown also IWM SPY has kind of shown a probable base at this point. But we haven't got the advanced decline line pushing to a very broad market just yet. So again, if the market wants to keep going, remember, if mid caps and small caps guys perform better post rate cut, which is coming this month in September, we believe, then that is actually a really bad sign for the markets. If large caps keep winning, that's actually a better sign. And this brings us to our point here from Jury and Trimmer, which is that we are already past the median duration, and we're basically on what you would generally expect, around a 88 to 90% gain from the bear market to the current bull market so far, and that we've lasted around 35 months. Now, sometimes you kind of see a lot of these markets starting to weaken off somewhere around 45 to 47 months. Now, you might say, but Tom, we already went into a bear market and then we've now started a new rally. Of course, that's what many people out there are saying, which is that we lost 21%. Remember, when we lose over 20, you end up technically being in a bear market, so you start a new bull market. But maybe the speed of this one, you could partially ignore it. And I'm going to ignore it for this situation because I think Jurian's right on this. However, many people are not ignoring it, and they're saying new bull market, new reset, we're only about here, we're going over here. So remember, there are two sides to every story, guys. That's the difference there. But I think we're more in this kind of aspect, looking at a 45-month kind of run here on market. So will there be dips? I'm sure there will. Will the dip be in October? That seems more plausible. Is Q3 always very volatile? Yes. Why? Well, it has to do with earnings being over, and it also has to do with a rebalancing effect on markets. So speaking of that, where do we tend to see markets sell off? Well, we tend to see markets do a lot of this. And so far, that's actually been pretty much what it's been doing. It's been sitting on semiconductors, rotating in and out of different stocks. And if we are going to sell the standard way in a cycle, then we would sell around the middle of September. Now, remember, next week, the 19th, is the OPEX. That is the largest options expiration, often the largest of the year or close to it, because it's that quad kind of event. Now, will we be paying attention to that? Of course. But if sell-offs are going to happen, they generally happen at the halfway through September, and October obviously can be volatile as well. So remember, it's the August, September, October slot that tends to have this volatility in it. So it really becomes more consistent. Is this market acting the way you'd expect it to? Yeah, guys, it totally is. And of course, here is the latest data taking into account a pretty strong August. And according to Wayne Whaley, this actually sets up for October to be the most volatile month, other than, of course, the tariff month this year. So you can see here there's some pretty epic sell-off periods, but the standard is only around 2%. And in general, it is a 6 up, 18 down, which I think is a very telling statistic. So this is pretty rare, and certainly we will be paying a lot of attention to this. From there, some other things on the macro side that you want to be paying attention to. Obviously, jolts. This is now becoming more important. Jolts kind of now signaled, hey, we're probably late cycle, something's really wrong here in the economy. But again, the Fed might keep it just kind of going and ticking along for now, using, of course, the tools and the arsenal. And there's a good chance that with the inflation figures as well, we may see reinflation due to tariffs. That could also kind of kick the market into gear and give it a bit of a jolt as well, if you see what I did there. But the big thing here is that we have started to see weakness in the economy, similar to a really severe slowdown. Now, where we've actually seen pickups has actually been in China. Barber, just over the last 24 hours, announced some tokenization thing. But at the same time, the big one here has been that we've just seen Chinese stocks rallying into their earnings and doing pretty nicely across the board. Remember, follow the liquidity. And as we have done for now over 12 months, been pretty bullish on China. I continue to be bullish on China, and the reason is just the liquidity. It's just the central bank. They're pumping it. What can you do? Remember the rate cut. It's the time from that point to the next 6 months that matters. We will track it. We will look at it. Sub to the channel. Share it with your friends. Make sure you look at the structure. It was the same thing that we did last year when, of course, we got the cut and we saw after 3 months large caps were coming. Why did that is important? It pretty much means we weren't going to recession. So yeah, okay, people had like a 75, 80% recession chance or whatever they were talking about. Well, the classes were that the market said, no, it isn't. It's probably not a recession at that point. Hey, this time it could be different. So we'll see what happens. Now, another thing is, of course, the crypto market. Bitcoin remains weak. Now, Bitcoin is kind of doing its typical pullback. We've talked about this to death on the channel here, but I still want to kind of give it to people so that if you're new, you kind of see it. It's pretty classic for Bitcoin to go down. It's also classic for some of the large alts to hold. And it's also classic for dominance, that is dominance of Bitcoin to the others, to start to switch up a little bit here. If we do go into an alt market, which people, of course, are speculating on all the time, just remember it doesn't last for long. This is the standard path to alt season flow. This could be the last time this actually works, but it is widely known. So just remember, it's not that you're unique to know that anymore. I would say Bitcoin could be the most studied thing that I've seen over the last couple of years, and everyone's got an opinion on it. And generally speaking, I think people go down too far down the rabbit hole and end up getting so confused they have no idea what they're doing. You know what I mean, guys? It's like that analysis paralysis where you've got a chart and there's just lines all over it. They're like, this means goes up. Keep it simple, stupid. The KISS principle. It's very important. What about S&P 500? 6,500 plus equals positive gamma. So this is, of course, a fairly strong close for the market. It's super dull. It's super rotational. We're starting to see the signs of risk on again coming back, which obviously has happened since this S&P 500 inclusion and exclusion kind of report. And again, the S&P is pretty cool. It's doing all right. But yeah, it's just kind of slowly grinding up there. I always say if you're in a dull market, do not short it. It is too hard. The classic statement is do not short a dull market, but the key levels to watch in the future, 63.50, 62. So if we do start to see extreme vol, I think 62 in particular may have some super buys on it, but that is going to be important. Now let's jump on over to the options here for a moment because, of course, 6,500 was broken, which takes us to 65.30 in the next call wall. And we do have PPI coming before CPI. So PPI is on Wednesday, CPI is the big result for inflation comes on Thursday. And at the moment, you'd have to say people are trying to hedge. You can see here a bunch of 6,400, 6,450 puts coming in, but the market is in positive gamma. So it kind of points towards, more likely than not, trying to push towards that 6,600 zone. I mean, there's no real reason to say it isn't at this stage, even though that may feel totally wrong town. And don't get me wrong, the news could flip it just like that. But at this stage, we just don't have that reasoning. Tesla 350 is still the call wall. Haven't been able to get through that. We'll look at that soon. And Nvidia is getting damn close to making a change towards the upside after giving that head and shoulders pattern on the charts. So just remember, we are still bullish on the semis, but they've been sitting. So that is a pit, which is perfectly normal. We haven't really seen a full breakout yet, but I will be watching Nvidia. I'm sure a lot of you guys will as well. Now, maybe the most interesting one is the IBIT. And it looked like a lot of you guys in the comments yesterday said, nice, Tom, add that. I've been telling you to add IBIT for like 6 months. What's wrong with you, dude? Yeah, I've looked at the options contracts for, of course, Bitcoin, but I haven't really included them in the channel because it's just extra stuff to talk about. But I think it's pretty important because what you can see here is that if we take 64 for IBIT, which is about equivalent to 113,500 on the charts, then that's going to push to potentially 70, which just so happens to be around the all-time highs. So you can kind of see here how there's really nothing stopping. And of course, options are dynamic. But at this stage, if we break 64, 65, all of a sudden you're going towards 70 because there's really nothing stopping it. And this is what we call like, the beauty of understanding the options wall zones, because not only can you be in positive gamma, but also on top of that, you can be on a point which ramps really quickly, and it's like free air in front. So very important level, but for now, Bitcoin still remains in a downward trend, and we'll look at that soon. In terms of risk on, yes, the NASDAQ is now outperforming the SPY over the last 3 sessions, which of course, each time though, it seems to sell off after outperforming. But anyway, it is happening. So of course, we've got a bit of Mag 7 stock action, and we still see the top 10 stocks. Oracle, by the way, the earnings pushed it like, what was it, like $60 a stock or something after hours, I think. But we're still seeing kind of this doji at the point where you'd expect a bit of resistance. So maybe not these stocks exactly, but some of the Mag 7 have done well, particularly one of our ones that we thought was undervalued, which is Google. Will it be that Tesla breaks up soon just because everyone's going to be talking about Optimus and that will keep people kind of hyped? Hey, it could happen. And just I think the thing is that, I know a lot of you guys are saying, Tom, it's not possible. The economy's stuffed. Yeah, I know. But the thing is where macro people sometimes go wrong is they look at the macro and they think it's happening. It is happening, but it takes a long time to stuff it up, guys. A long time. So just remember the flow and the warning signs are important. And this is the only bearish chart we could find. We tried to find the bearish charts. I know some of you will say, well, what about the US 2-year, 30-year man and stuff? But this was really the only bearish chart that we could even find last week. And it's already trying to change it up. So it's 173 now. Potentially we break above that. We're looking good. But now, though, you could argue that NVIDIA is actually in a daily only bearish trend. So that's probably the worst looking chart. IWM SPY, so Russell 2000 still holding its own, showing small caps are doing pretty okay. And 2-year yields actually spiked over the last 24 hours. So this is probably going to be the storyline along with the dollar, because the dollar is coiling. And you guys know what I think about coiling markets. Gold was basically coiling, broke out, went ballistic. Everyone's talking about it. This was the most traded pair. Remember, it was the most crowded thing. Everyone was short dollars. Since then, as we thought, it's consolidated or even improved a little bit. But now we face the real wrath of the dollar, because the dollar could actually go either direction, but I think it's going to be pretty fierce. And notice here, you've got so many rejections. Imagine if this thing squeezes up. It'll be totally counter to what people think, but hey, it is possible. So just remember, the dollar break is going to be pretty big, I think. What about gold? Still bullish, guys. Obviously, expectations up to here, but do keep in mind that yes, the RSI is super overbought. Has it been for a while? Yes. Have you been mentioning that in the comments? Yes. Have I cared? No. But now I kind of do, because of the sentiment. And the problem is this part. Okay? And it's not that I'm bearish on gold. I think gold has a lot more to go in it. It's just that I think that it's probably not really worth entering in here. You have to wait for the right price. Speaking of right price, is that for silver? Probably not. But silver also still looks good. And it's still rallying. And of course, it hit close to that 42 target that I've had, 42.43 for a while. But it's still just chilling. It's chilling. And that's absolutely fine. So I wouldn't even mind if it does something like that. If that happens, oh, wow, it's going to go really bullish. So yeah, silver, gold, both very strong. Gold stocks in particular going ballistic. So again, it is very hot on Wall Street right now to be bullish on gold. And it just wasn't that way when we first talked about it 2.5, 3 years ago. Let's take a look here at US oil. US oil is getting close to that 63.80, so that's going to be kind of an important break if it does happen. And the continuation here of the stocks being included into the S&P has happened with Hood at Lovin. We've also seen coin starting to pick up a little bit here over the last 24 hours, and it possibly going to be able to create a double bottom base. Just remember, there's always a lot of abundance in the markets. There's heaps and heaps of opportunities. Don't chase something if it's the wrong price. That's just stupid. We don't want to be doing that. Tesla 350 plus could activate buys. For now, it is trapped. It cannot get past 350 just yet. And of course, the Chinese market continues to look pretty strong, in particular with HSI. Look at, wow, it's doing even better. By the time of the recording, it was only up like 0.2. Now it's up 1.2. So it just shows you again the power of the flows and the power of the liquidity of the central banks. It's almost like we live in the Matrix when you start looking at this type of stuff, guys. But you can see here the 50 It's kind of a beautiful thing, I guess. And Barber also breaking on their way up as well. US 2K, a little bit weak here, but generally speaking, still looking for 2440. And of course, you can see here the NASDAQ slowly pushing up. Now, there are a lot of large trades around this level. And remember, large trades don't actually have stop losses. So the thing about it is, this was on the Qs. We saw the largest trade ever on the VOOs. Time will tell what really is happening here. But certainly for now, it's a dull market, very tough to short. And just remember, the big thing here is semiconductors, and they're improving. I mean, they're getting closer to that breakout kind of level. So for now, what's happened? It's just stuck in a range. But if that range breaks to the upside, you've got to say it's risk on again. For now, of course, it could easily sell as well. So just remember, NVIDIA may hold the key. Could be one of the more important charts to watch. The other important chart's got to be Bitcoin. Look at this 113.5. Well done, everyone. This is a good level. Congrats. I mean, I like it because it just looks cool on the charts. You know how it feels like when you put a zone, you just put a line in the sand and you just say, don't get past that. I used to have what I called the fence, and I used to draw a little fence on the chart for any of the OGs that used to watch the live streams when I live streamed 5 hours a day or whatever it was. And I still remember like doing this. A lot of people liked it. But the thing is, it's kind of a fence. It may be broken down, maybe stampeded through. The sheep may escape, guys. But in this case, we have been trapping that zone. And you can kind of always love it when good TA levels, you can see the rejection on the wick, shows you that heavy sell that comes through. But it also tells you that because at the moment we're seeing a series of higher highs and higher lows, that we're putting a lot of pressure on this area. So if it breaks out, what's the next level? Well, according to IBIT, could be up here at the 120K level. So again, current market's down. Current market is bearish. Maybe it keeps going bearish. 104.98, two key zones. But certainly there's a lot of fighting over the 113.5 on the charts. So what are we all interested in? Well, it's really only one thing. PPI next, well, I guess it's two things. PPI over the next 24 hours, 8:30 New York. And then the next one, guys, is 8:30 on Thursday. CPI is coming, and we will find out whether the tariffs are taking an effect. Again, do not try to interpret it. Instead, follow the flows. That's all that matters. Do not worry about the news too much. We report on the news. We check it out. We mostly debunk it. And the main reason is because it doesn't matter to how we make money or even lose money. You've got to be looking at the flows. And of course, that's what we break down here on the channel. If you enjoyed today's video, remember to give it a subscribe, hit the bell icon, check us out next, check me out on LinkedIn as well. And if you're interested in finding out more about how we pick gold, silver, even Bitcoin cycle, all this type of stuff, there is a greater cycle going on. And let me just tell you, it is mind-bending when you find out about it. It is in our advanced course, and yes, I will plug that right now. Thank you so much, guys. You have a fantastic day, and I'll see you for the next one, post-PPI, where we find out how is this US economy really faring. Catch up.